Thanks again for joining us on yet another episode of Revelations with Roxanne. Last episode, we were talking about life insurance and some of the intricacies there and when is the appropriate time to be talking to your advisor about it. And today we're going to be chatting about the very exciting topic of disability insurance. And Roxanne and I love numbers and statistics so much that right before this recording, we were geeking out and checking out statistics of things and talking about disability insurance. How is it priced? And it's really based off of actuarial tables, which is a really complicated way of saying people do studies on level of risk and how much and what likelihood it is to happen. So, we often talk about life insurance and people are getting more comfortable with the subject, but the reality is the likelihood of someone passing away when they're middle-aged is a lot lower than their risks for disability or critical illness. And so we were just talking right before this meeting, the likelihood of disability, critical illness, or dying before age 65 is 59%, which is really quite astounding. And of that, passing away is actually only 9% of that risk, and disability is 34%, where critical illness is 37%. So it's really quite astounding.
Yeah, I think it's key to remember at the end of the day that disability comes from both injury and illness, and we're not invincible. And the more we like to live, the higher our risk. Because we don't want to stay in that bubble in our home forever. I think COVID has pointed that out to us quite well.
Isn't that true? So when does it make sense for someone to be looking at disability insurance?
Certainly anytime someone has spent a lot of time and energy getting educated for a profession. There is a professional series, and we can typically actually apply within your third or fourth year coming into the end of those programs. Because remember, what we're really doing when we're buying disability insurance is we're insuring our greatest asset. And our earning potential is our greatest asset. There's no denying that, particularly for those that are in highly educated professions like optometry. So the sooner you get that, the better, both from a runway perspective and your greatest asset perspective, but also because the younger we are, the less likely we're going to have had a great big history of crap happen to us. Unfortunately, when we look at disability underwriting, it's quite extensive because all underwriting is designed to put people in a pool and make the pricing fair for everybody, right? I don't want to be priced the same for a back injury against somebody who has had a broken back at age 12 because of a dirt bike accident. Their risk of that disability occurring is much higher than me, so I don't want to pay as much for that as they do. So obviously, as time goes on, our risks, because of the history of what's happened to us, goes up. So when we underwrite younger, we have less of those factors that are impacting us.
Yeah, I know once 30 hit, you wake up in the morning and you put your feet on the ground and you're like, oh man, why does my foot hurt? I was just sleeping.
Yeah, getting in and out of a vehicle as we get older is fun too. It's like, I do appreciate my husband's truck. When I was weak from illness, it was tough to get up in there. But the rest of the time, boy, my joints do prefer sitting up in that truck level.
So as far as disability insurance goes, does it make sense for someone who's an individual or a business owner, or where's it most important that people are looking at it?
I think anytime your household, whether that's a household of one or a household of a spouse and 10 kids, anytime your household has any dependency on your income, you need to have protection on that income.
And I'm going to pick on financial institutions, large ones that we maybe do some day-to-day transactions with. they have a tendency towards helping you secure coverage on your debt, which is great. But at the end of the day, if you're disabled, you still need to get food in your children's stomachs, and you need to pay your mortgage, and you need to pay for gas to get to appointments. And so there's a big piece of the puzzle that needs to be looked at.
Yeah, when we're talking about what our typical large bank institutions are looking for, they're looking to cover their butt. They want to get their money back. So when you're buying insurance through that type of system, which is a consumer-based insurance, really it's about protecting that bank so they get their money. It's not about them caring about you, right? Very different perspective than when we're dealing with independent financial advisors, because again, my fiduciary responsibility is to you and caring about you, right? I want to make sure you're covered. You're covered for all the potential crap that can happen in life. And if none of that crap ever happens to you, thank God.
Yeah.
You know, but if it is going to happen to you, I also want you to know that you're going to be okay.
Yeah, absolutely. So as far as business owners, what role does that play?
There's a couple different roles. Again, you are responsible for managing your finances at home. So that's that income protection side. But then in the business, you're also responsible for making sure how is that business going to run. And again, if I'm talking about my optometrist clients, if you're the primary doctor seeing patients and you can't work, what happens to your business? Right? Can you still pay your staff? Can you still keep the doors open? Can you still make sure that that business is there for you when you recover, or that you have time to create that asset to sell and pass on to somebody else if you're not going to recover? Those are key factors for us. So there are also disability products that are built for your business. So key man insurance, and you might be the key man as the owner. So business office overhead coverage. Perhaps you have a large loan. When you purchase that practice, business loan protection coverage so that those loan payments can keep getting made while you're recovering, right? Yes, you can bring in potentially, depending where you live, an associate to help cover those expenses while you're trying to recover. But we all know associates do not generate the same income as business owners.
Sure. You had touched briefly on key man insurance there. So I know, just backing the conversation up a little bit, as a CFO of working with your clients, you look at unanimous shareholder agreements quite a lot. And yeah, you're laughing because you know exactly where I'm going with this, is you look at these agreements quite a lot and the statements that they have in them regarding if something were to happen in business, if somebody became disabled or passed away, they often talk about insurance in those. What's your experience there?
Every time I can convince a client that the unanimous shareholder agreement is important is a win for everybody, because we all start businesses in the honeymoon stage and we think none of that crap's going to happen. We're always going to get along. Nobody's ever going to get sick. Nobody's ever going to not show up to work. We always respect each other. It's all going to be great until it's not. Right? So it's
just
far
like a marriage.
better. Yeah, so it's far better to discuss these things way ahead of time when we are still very happy with each other. We can make rational decisions, but we have to make sure that the funding is also there, because it's great to have these super statements in there, these apple pie statements, but if we don't have a way to cover the cost, then what? We don't want to leave ourselves open to, you know, potentially even ruining. Now, I've done income replacement for my home to take care of my family. I've got this unanimous shareholder agreement that talks about mandating different things. That makes sense, but I didn't put the business insurance in place. So now I have to fork over everything from my family to cover off the business.
Yeah.
Not cool.
And another risk there too is if you're in equal partnership with someone and you take care of it and they don't, then what, right? You feel like you're doing your part to help carry the burden, but when rubber meets the road, then what?
Yeah. Ownership, we have to make sure we've got the right ownership on policies, the right beneficiaries on policies, the right payers, both from a tax perspective, but also from a claims perspective.
Yeah.
Both are key.
Sounds super complicated, but for people like us who like running numbers and strategies and reading lengthy documents, exciting like unanimous shareholder agreements. That's all part of what we do, right?
Absolutely. Taking care of you is key. And unfortunately, that does mean I have to look at all the potential crap that can happen.
Which is painful sometimes, but it's not that bad, because if the clients can collect the data, we can help interpret it and help come up with a plan that makes sense for you.
Absolutely. And yeah, unfortunately, I know too much about the crap. So
yeah,
you know, it happens. I've got too many stories.
Yeah, you speak from a place of experience, so that carries a lot of weight, right?
Yeah.
Awesome. Well, thanks for your time today, Roxanne, and thanks everybody for joining us. If you have any questions or a topic you'd like us to cover, feel free to reach out. Our contact information is coming right up.
Thanks so much.